they have to have the actual passive income operating system. That means they have to actually think about their cash flow in such a way that it serves what their why is. They have to actually start to put in place that, why am I putting money into 401k when I can't touch it until I'm 59 and a half and I'm 30 or I'm 35? Like, I'm literally telling myself I want financial freedom today.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why? Hi, everyone. I'm Jason Balara, and this is the Know Your Why podcast. Today, I'm here with Joey Muré. Joey's the founder and partner at Wealth Without Wall Street, brings impact, integrity, and generosity to the company every day. Joey, there's a lot of kind of amazing stuff here in your bio. There's we already talked a bit before we started recording. I think we have a lot of similar maybe drives in life. But I first want to say thank you for coming on the show. Thank you for taking the time out today. I'm very excited to chat with you and hear about you and share your story with our listeners. So thank you for being here.
Oh, likewise, man. Always good to be with like-minded people.
Yeah, absolutely. Let's start with your story, your background. Tell us about yourself. Tell us kind of, where you got started, what got you to where you are today, and then we'll just have a conversation from there.
Well, so there was this young man. He was 19 years old, and he married my mom. No, I'm not going to go that far back. I'll tell you, Jason. I'll just give you the quick and dirty. But I got my start in my career in the mortgage business, and about 11 years into that career, I decided the things I was doing on the personal finance side that I had learned just 4 years before made such a dramatic impact on my life that I really felt like God was putting his thumb in my back and saying, you need to be teaching other people this. Like, this is a game changer for you, but there's so many people that don't know about this. And man, so in 2014, my wife was pregnant with our fourth daughter. And we have 5 daughters, by the way, Jason, but our fourth was on the way, and I was the only asset at work. And I decided to cold turkey, leave that career and start into this personal finance space. And man, it's been a dramatic ride since then. But that's where we founded Wealth Without Wall Street and started to just inform and expose people to what else is out there as alternatives to the Wall Street mindset and game, and give people the true path to financial freedom. So that's where we've been.
That's a bold step to take, I think, at at that stage. So you said you did it cold turkey. So I mean, maybe talk a little bit about that decision and maybe what that looked like in the beginning, because I think that's with I think it's easier to take those steps sometimes when you're 20, no kids, that kind of thing. When you're already have an established career, you have kids, more kids on the way. Like I don't know that it's riskier, but the stakes are higher.
Sure.
Which in some ways is probably a good thing. It's motivating to have sort of that level of responsibility. So talk a little bit about that time for you.
Well, man, you're saying it very well. It was certainly a decision I didn't rush out into. I did feel compelled, and I think that there's something really powerful about. I love the name of your podcast is to know your why, but for me, my why has always been impact, and it's a way that I see like the filter of my life is that, man, there's a dash in between when you're born and when you die, and it's really short. And so how can I be an impact on this world, on my family, on my community? And for me, it was like one of those things where God really started to reveal what you're doing is great, helping people with their mortgage. I was making over $300,000 a year. I mean, I didn't have any need for anything. It was actually, things were pretty comfortable. Um, but that dash has such little time. I had to start to really map out, well, if I could help people find a path to true financial freedom and not just be a part of getting them into debt on one of the largest assets or liabilities in their lifetime, that would give me more impact. And so it made that decision a little easier. But man, I take the Bible at face value, and it says many counselors make for wise direction. And so I went to people who are older than me who could kind of see backwards and say, one, you know who I am as a person, you know my strengths, you know my weaknesses. This is what I'm kind of thinking that I should do. And through that process, it was like doors kept opening and not shutting. And I just kept walking through them. And that led me to, like I said, in 2014, leaving that career behind. And it was so impactful, Jason, that all the different real estate agents and mortgage professionals that I had been building a career around for 11 years, they were so shocked that I had left the career. They either thought one of two things: what happened, like something is really wrong that you would have to leave, or something is really right and I need to learn whatever that reason is that you left. And so, man, my business exploded very soon thereafter because people were so curious. They were like, man, tell me about your story. Tell me what's happened that makes you think that you can go and help people in such a dramatic way. And so that was really confirming.
Yeah. Yeah. No, I mean, I don't know. There's nothing more powerful than, sort of reaching out to people, that know you well, that you trust, and kind of formulating that plan. What steps did you take? Because I think the thing about it being, sort of the Know Your Why podcast is it's sometimes a little bit, the word that keeps coming in my head is ethereal. I don't know that that's the right word, but it can be a bit about the vision, and every person's vision might be a little bit different. What steps did you do? Did you take in the beginning? How did you sort of tactically approach that? Because it sounds like you were intentional about it. You were compelled in that direction, but then execution is also a different story.
Yeah. Well, I'm kind of go two ways with this answer. So the first thing, I'll back up to 2009, is when my now business partner, he was a good friend of mine from church. He sat me down. He was like, man, he was a financial advisor and he had just lost his shirt in the Wall Street meltdown.
Yeah.
And he was just like, dude, I'm not going back to that. I can't be the money manager, the money babysitter is what we call them, that lost all these people's money. I can't do that anymore. I found a different path. And so he gave me a book called Become Your Own Banker by R. Nelson Nash. And at the time, I was reading it because I wanted his referrals. He was like, hey, I'll refer you clients if you understand what I'm doing. And so I read the book and thought, I'll start getting mortgage referrals. That was my whole point. After I read the book, it was like light bulbs went off. It was like, I don't know, Jason, if you had the similar experience, but before I got exposed to this concept, Become Your Own Banker, and then subsequently to alternative asset investing, I was really stuck thinking, I don't really want to put money into 401ks and IRAs and like all these things that seem way more complex and way more confusing and no control and no insight or no influence. I just have to kind of like put my money away and hope for the best in 40 years that there's enough to live off of in retirement. And like that just never made sense, but I didn't know there was any alternatives. Well, that book opened my eyes and I was like, whoa, this is what I've always been looking for and didn't know I was looking for it. And as I started to implement those things, this would be like step one. I start implementing the things from that book. And what it did, the shift was I quit putting money away in things I didn't understand and couldn't access. And I started putting money into my control. Is like one of the key components of that book is this: to think like a banker. And that means you have to actively become an investor. You have to actively know how to take control of your own financial, well-being, instead of abdicating that to Wall Street. And so that was the big thing for me. As I did that, Jason, it dramatically changed my outlook on what's possible. And it started to, I still didn't have like the understanding of how to be an investor, but I realized I needed to become one. And that's where I was like, man, there's something really special to this. There's something that people need to know. And that gave me the confidence and like I said, I was compelled to start teaching other people as I went along. So then that was like, okay, that was confirmation I need to do this. And once I went to I guess step 3 would have been going to those different counselors and getting them to kind of give me like a stamp of approval. Like, hey, there's something to this. You're not just kind of, manufacturing this idea in your mind. And then from there, it was like, I'm just going to get out there and just tell as many people as I can. And for me, that was just local audience. That was local mortgage, real estate community, and then friends and family and people like that, and just start telling my story. And the really cool thing is that was a powerful story for people to take in. And they were like, wait a minute, I've had some of the same exact concerns. I've had some of the same exact kind of question marks, that maybe what I've been doing with money isn't getting me closer to financial freedom, isn't actually getting me to the end goal. And I needed to have my eyes open as well. So I just had a lot of people start following the same process that I did. And so I don't know if those are necessarily super laid out steps, but that's kind of what happened. And subsequently thereafter, Russ and I, my business partner, Russ, so we started the podcast in 2017. And that's when things really exploded, because we went from this local belly to belly kind of process of teaching people to having to scale to a national audience. And that's really when we started a business, because it was no longer he and I doing all the day to day. We had to really scale a team to be able to serve the amount of people that were coming that way.
Yeah. So tell us a little bit about Wealth Without Wall Street, what your business model is, what, kind of the excuse me, the service provided, that all these people were coming in. What was what do you, I guess, give us a pitch sort of for your company, so people listening can know too. I mean, and understand, kind of what they'd be coming for.
For sure. Well, I'll tell you this. First of all, what we exist for is for people who want to be financially free to get there faster. Okay. And so it always starts with a definition, because if everybody has their own idea of what financial freedom looks like, but for us, we're calling people into this process. One, when your passive income exceeds your monthly expenses, your calendar is your own. Right? If you imagine that, and you may already be there, but there's a lot of people that don't know this. If I have more passive income coming in from the assets that I've purchased, whether it be, I know you and I talked about multifamily being a strategy, or business ownership, or any of there's tons and tons of options which we cover on our show. But whatever your path is, whatever creates more passive income that you don't actively go to work for every day to cover your monthly expenses, whether that's $2,000 or $20,000 or $200,000 a month, that's when you're actually free. That's when you pull up your calendar app and it's full of the things you want on there. Nobody else is dictating to you what goes on that calendar. That is true freedom. That is spending time with our children. That is going and picking them up from school, taking them to school. That is being able to retire your spouse. That is like whatever the why. And I love the name of your podcast, because this is exactly where we start. if you don't have a vision of what financial freedom will look like for you, you will give up along the way, right? Because it's hard. Creating financial freedom is hard. The formula is easy, but the work to get there is hard. And so what we've done, you asked me for a pitch. I'll just tell you there's 3 phases for people that want to do this. One, they have to have the actual passive income operating system. That means they have to actually think about their cash flow in such a way that it serves what their why is. They have to actually start to put in place that, why am I putting money into a 401k when I can't touch it until I'm 59 and a half and I'm 30 or I'm 35? Like I'm literally telling myself I want financial freedom today, but I'm deferring my access to that capital for 30 years. That doesn't make sense, right? So I need to stop doing certain things with money. I need to start doing certain things with money, like maybe not paying off my debt overnight, like reducing the amount I put towards debt repayment so that I can put more towards an asset, right? That creates passive income. Anyways, we get into a whole lot more details, but we start putting money into your access, into your control through the passive income operating system. The second step is getting that first stream of passive income, right? Building an acumen, building a buy box, learning your investor DNA. We call it, it's your profile. Your personality has to line up with what you invest in. It's not all about ROI. It's not all about, well, this one has a good tax benefit. I don't care what the actual ROI and tax benefits are if they don't line up with who you are as an investor. And so that's our second step, is figuring out who you are and making that first investment and creating that first passive income stream. Once you've done that, we kind of graduate you into our passive income mastermind, which is where you're surrounded with other investors who are now on the path to getting to full financial freedom. That means 100% of your expenses are covered by that passive income. You're in the room with the people who have done it or are doing it. And now you're able to share notes. Now you're able to be at the water cooler, so to speak, of other people who are not pulling you down like crabs in a barrel, but encouraging you and cheering you on as you make those steps to get to financial freedom. So that's kind of, if that helps, it kind of lays out like what we see as the path to get you there as fast as possible.
Yeah. I actually love the way that's laid out. I think there has to be a starting point of sort of commitment to the process of raising or having passive income. And you said it's hard. The formula is easy, but it's hard. And I think that's 100% true. It's not like rocket science, brain surgery, whichever cliche you want to use. It's not that hard to understand that passive income is created by having assets that throw off, some level of cash flow. But to get there is not that easy, and you need some level of active income in the beginning to get there. So it's, I think, putting it as installing that operating system is a really great way because a lot of it is just mindset around what that process is going to be. You mentioned, maybe not pushing to pay off the debt. I come from the veterinary world, and there's a lot of student debt, and it's not just exclusive to veterinarians, but I see entire groups focused on paying off student debt as fast as possible, and I'm like, that doesn't make any financial sense. You would be far better off putting that money into an investment, buying assets, creating passive income, like you said, and using that to pay those school loans or even anything that's like a low interest rate. It's just people, the education around it, which is why I really love that idea of installing that operating system, the education around it of what's just, you may have exactly the amount of money that you have right now and just be allocating it in the wrong place and holding yourself back by doing that. So I think it's really smart that approach that you take to it for your clients. I think it makes a lot of sense. When you're talking about the passive income for people, I know we touched on real estate, do you have specific asset classes that you like, recommend, that sort of thing? Or is this a more of a holistic look at passive income? And there are obviously some that provide more than others. And so I think I'm just curious what your take is and what you talk to people about.
For sure. Yeah. No. And the funny thing is when people hear that our podcast is called Wealth Without Wall Street, they immediately say, what do you invest in?
Yeah.
Because they're interested. Like, hey, I don't necessarily love what I'm doing in Wall Street, so maybe there's a better alternative. And they immediately want to go to the investment. What I also caution people, I say, man, start with who you are as an investor. That's why I was talking about this profile that we created. You got to start there. But then from there, we've built I think it's about 18 different passive income asset classes on a framework. We call it our passive income matrix, that once you know your profile, you then apply it to this matrix. And it acts almost like a filter. It's like, hey, this is what you're going to love about short-term rentals because you're a driver type and you love to be on the front end. You love the returns that you're going to get. You love the fact that you can scale quickly. You love like all these things. But the things you're not going to like, right, are that you're having to deal with really dumb questions sometimes. Like people are like, how do I open the back door? It's like,
Yeah.
are you serious right now? Like you're asking me like there's dumb questions that happen. If you're that driver type, you're not going to love that. So maybe you want to try like hire a management company to be able to scale quickly. Or we talk about land flipping, right? Buying raw land that we turn into owner finance notes. We've done that at scale with a team that does it for us. Russ and I don't do it. And that for us has alone created over 33,000 a month in passive income. Just that one strategy. We've got Turo operators that we've bought cars and given to them to run for us. So it's still passive to us. Last month alone, I haven't even reported on our show yet about this, but you can tune in for our passive income report every single month. We share our whole story. But last month, I have a minivan and two like economy cars. And those three cars paid me over $1,600 in passive income because they were fully operated by my operating partner, who they just pay them a management fee. But the 1,600 was net after everything. Like that's pretty good for these cars that cost me like $8,000. It wasn't a very expensive.
Yeah.
So there's low barrier of entry type of strategies. There's high barrier of entry. Like some syndications have a requirement for 100,000 or more minimum. But man, we've done syndications. We've done mobile home parks. We've done oil and gas funds. We've got a long-term rentals. I've rented out an RV before, which by the way, don't do that. It's those things are terrible. They break down like every 2 minutes. But we have all the good, the bad, and the ugly on our report. But that's just kind of a quick taste of what all we've been involved in.
Yeah, no, that's great. I think that is, allowing your investors to, and not just allowing, but helping them find their own in profile as an investor. I think my theory has always been when I talk to an investor, like first you have to decide if you want to be active or passive or both. Like those are all options. But yeah, then beyond that, okay, what asset class? And you'll be shocked if you're just new to it. You'll be shocked to find out how many there are. I mean, you just listed off a handful, and it's like I'm sure people listening already just heard, 3 things they had never thought about investing in before. And so it's just kind of, it's fascinating to me that this is called alternative investing, right? So, your Wealth Without Wall Street is maybe becoming not a common theme, but you're starting to see people push people outside of that space, whether it's through real estate or with business acquisitions or whatnot. And I think the fact is, like, we say alternative investments, but most of the alternative investments are like housing. That's not an alternative investment. Like people live in houses. It's not like this crazy. I think sometimes it's kept like this secret society or something like that. But it's like it's housing, it's apartments, it's Toros, cars, like it's things that are not really alternative to life. They're just not what you traditionally think of investing, and I think that's somewhat on purpose from Wall Street's side of this that scenario.
There's no doubt that that last statement is so true, Jason. On purpose, Wall Street has done an amazing job of marketing, right? They have convinced us that they are smarter than us, that they are the ones that are better stewards of our money than we are, and that we should, like, think about this for a second. We should hand over our dollars today, which, think about inflation, are the most valuable dollars we'll ever have. Okay. Because tomorrow, those dollars are worth less. True?
Yep.
So they have convinced us, big banks and Wall Street have convinced us, take your money today, your most valuable dollars, give them to me. I'm going to hold on to them for as long as you'll let me. And I will take 100%, let me be clear on the players here. You as the investor take all the risk. Right? So give me your dollars today. I'm Wall Street. I'm smarter than you. I can manage it better than you, but I cannot be held responsible when it loses money. And we're okay with that. We have literally said, well, I mean, we'll just do dollar cost averaging. It'll eventually catch up. I'm young. I can just, like, all these lies that have been told to us. You're young. You can just take the hit and eventually it'll work itself out. But by the way, if the market crashes and you're 59 and a half, are you going to really feel good about stepping out into the retirement world? And it's all predicated on scarcity. Jason, you have to live off of as least as possible today to make sure you're stacking up as much as you possibly can into this magical mountain of cash that you hope will be enough that you can just start taking dollars off the top. And are you going to all of a sudden start living abundantly? Absolutely not. Because then it's like, hey, I'm at the pinnacle. I've retired. In fact, one time I was at the beach, Jason. I get a little fired up about this, so forgive me. I have my Wealth Without Wall Street shirt on at the beach, and this older lady comes and she's like, hey, tell me what's on your shirt. I was like, oh, that's our company, Wealth Without Wall Street. She's like, well, what's that about? And I start telling her. She's like, well, my husband and I, we retired this year, and I hope it's enough. That was literally her words. I'm not fabricating anything. I hope it's enough. And you can imagine, like, she's at the pinnacle, like the goal. What was the goal? To finally be able to retire, to get freedom of my time at some point in the future. They finally pulled the trigger. And what's her only thing she can hold on to? I hope it's enough. Like, this is a bad strategy because she's now free with her time, but is she free to actually spend money on the things that she's been putting off and deferring for 40 years? No. She's now wondering, should I go on that vacation? Like, I don't know. Should we splurge to go see our grandkids? Or that's not really in the budget. We're on fixed income. Like, all these things, man. This is a bad strategy. And it's because we have been duped by Wall Street to give up access of our cash to somebody else who has no fiscal responsibility for what happens to it. We have to reverse the polarity on that and start taking control of our finances today ourselves. We have to take you're talking about your kids. Nobody ever says, you know what? I don't really know how to be a good dad. I've never done this before. So is there someone else I can just hand these kids over to? Like, they could probably parent better than me.
Yeah.
No, like, you're going to just buckle down and you're going to seek resources. You're going to become the parent that you want to be because nobody else can do it like you can. And the same is true with your money. Like, you cannot abdicate that to somebody else. It will never go well. So I'm sorry I get on my little,
Oh
you
no,
know,
I agree.
rampage
I
here.
agree completely, and I think it takes spending some time and effort to like learn all the things you just talked about. It really, because it's not, like you said, the marketing behind Wall Street and traditional investing is pretty strong. I mean, it's literally like tied into our jobs and government and all of this stuff. Like which I mean, it's crazy, but it's true. It's like you use the example of that woman, her and her husband retire and hope it's enough. Like you literally, the traditional retirement route is to hope I die before I run out of money. Like that's it. Like that's literally what we're or like I hope my kids can help me or whatever it ends up being. But it's like really like I don't I my previous thought process around retirement was I don't want to retire because I don't want to be in that position. I don't want to be in a position where I'm like I can't uh I'll never make any more money again or anything like that. And it's like, so my thought process has had to shift a lot around it. But I understand, like, yeah, people. I mean, think about the people that were set to retire in 2008, 2009, like, and they had only traditional investments. Like, what do? You work another 20 years? I don't really know. Like, is that even an option? Like, I don't know what people do, and so it's just when you start to think about it that way, and not to be total doom and gloom, but like at least if you think about these things, then you can use these other plans in place. And it's like any investment can lose some money, but like if you're diversified outside of just Wall Street, and even outside of just real estate, or like I'm sure you don't suggest to your clients only buy a fleet of cars so that you can only do Turo. Like that's not it's just kind of like it's like thinking about what the options are and picking a few of them, like just not just one. And being in a mutual fund or something like that is not diversified. You're in the stock market. It all goes together for the most part. Like it's all mostly driven by seven tech stocks. Like there's, at least at this point in history, like it's just there are things that if you know that stuff, like you're better off investing in those seven tech stocks than the market as a whole over the last however many years. So it's just kind of like understanding how it all works together is really important. So the I guess what I'm saying is I love the service that you're providing, and the thought process behind it. So
Well,
really,
and can I
really
add
wonderful.
to what you're just saying there?
Sure. Yeah.
So the other thought about this is that there is nobody that has arrived, right? To your point, let's say that you start making your way with short-term rentals, and you've just like, man, I'm starting to see 2,000, 4,000, 6,000 a month, and I'm starting to get to a point where let's say I'm now 60% of the way to financial freedom, and I'm learning and I'm doing, and it's being successful. But you can't just take your mind out of it. You have to constantly be filling yourself with information, market data, economic trends. You're an investor. Investors don't just blindly just put money somewhere and say, well, the same thing that was working 3 years ago is still working today. I think you mentioned like multifamily. Multifamily was super hot for a very like a decent amount of time, but then there's cycles where it loses a little bit of ground in terms of the cap rates and the returns that people can get from it. And so you have to think, well, where is the puck going? And you can't do that if you're not educating yourself and becoming an investor. There is no replacement for you. You have to be
Yeah.
the investor. And so that's why we have masterminds, because we're constantly being pumped into those kind of cohorts where what is happening right now and what is the opportunity ahead of us. And so I just say that to say there's no replacing you as the investor. You just have to constantly sharpen the saw and get out there and keep learning.
Yeah. No, I love that point. I think you have, even as a passive investor, you have to actively be involved in what your strategy is, and it's again, it just goes back to the kind of Wall Street wealth managers. It's very, very well documented that they're no better at it than you are. Like it's very, very well documented. I mean, Warren Buffett, the most famous investor of all time, is like, it's very well documented that the people that you're arbitrarily having hold your money and invest it for you are no better than you would do if you just did it on your own Robinhood app. You just wouldn't be paying all the fees. Like, and it's just kind of like that's the thing, is like people are afraid to do it wrong, but I'm like, at least you have your own accountability, right? You mentioned it
Exactly.
before, but it's like the wealth managers are still going to get their fees even if it goes bad. Like
Exactly.
they're still getting their fees based on how whatever money you have left in there. Like it's still there. So anyway, won't go too far into that rant, but yeah, I mean the message is you do have to take some active ownership of your future financial goals and ways to achieve them. So Joey, we could, I think we could rant on this probably all day, but I'll switch gears. We'll talk a bit about, I guess what we'll talk about, kind of the questions I ask each guest. And the first one, I think you've touched on this some, but the first one I ask every guest is based on the name of the show being Know Your Why. And so I want to ask you what your why is. I at least give you the opportunity to expand on some of the stuff you've touched on already, but please, kind of tell us what drives you.
Yeah, I think for me, again, I just sum it up into impact. Where can I have the most impact? What can I be doing right now with my time that will have the biggest return, essentially? And those returns are all the different resources that God's given me. I want to steward well. That's relationships, that's education, that's experiences. It's my family. Um, there's actually even this idea that by us going online, we've been able to have a greater impact than we would have been individually. Was there a big learning curve? Absolutely. Was it difficult to figure out how to scale a team? Absolutely. But those are the ways in which we can impact the most people.
Yeah. Taking those steps to have a greater impact, I think that's one of those things that you do have to be compelled to. You do have to have that, kind of abundance mindset when, you hear people talk about what, isn't it enough? Don't you have enough? Is whether that means money or real estate or anything. Don't you have enough? And I think that's, in a lot of ways, that's just thinking small. Like I don't I don't know that I would ever be able to create enough money/impact to feed all of the hungry children in the world. So like there isn't enough. I don't think there's enough because I mean, I'll let you know if I achieve it, but like that's until I could do that, then no, I don't think there's enough. And so I don't think about it in terms of like my family has enough now. They had enough before I started really getting serious in real estate. Like I can have a job that pays me enough. Like we're happy. We don't need a lot of things. And so it's just kind of like that that drive to have greater and greater impact. I think it just really love to hear that, and I think it's so important. Um, when people hear this and they want to reach out to you or connect with you, what's the best way for them to get in touch?
But we created a page just for your podcast that people can get access to any of our free resources and reach out to us. All of our contact info is at wealthwithoutwallstreet.com/know your why. So wealthwithoutwallstreet.com/know your why. If you go there, you can access all that information for free. And I'd love for people to just say, hey, Joey, I heard you on the Know Your Why podcast. That way I know that people are listening.
Yeah, Awesome. I appreciate that. I'll end it with this question, and I kind of want to leave it open ended because I want you to take it wherever you want to. But I often ask people, where would you recommend people get started in real estate? Is often the end of that question. But I think your mission and message here is maybe realistically bigger than that. So I will ask the question as, where do you think people should get started? Obviously they can connect with you, but they are interested in what you have to say. What do you tell them next?
I think starting with your whys is huge. If you and your spouse have not sat down and actually mapped out what would we be doing, who would we be, and what would we have if we were financially free, that is the absolute first step. Because if you can both get serious about what that looks like and excited about it, that will motivate you to take the necessary actions. Because like I said, it's not easy. It's hard to do. But if you can be clear on that, it's amazing what you can then accomplish, because then you can be objective. You can't be objective without that. You start to then question, well, why am I doing what I'm doing with money? Why am I deferring this? Why am I, acting the way that I am? This is going against what I would really want to do. How do I stop doing that? Right? So starting with your why is huge. And then I would say for those who are just trying to figure out what to invest in, or maybe I love the idea of real estate, but nothing has really kind of jived with me so far that I've heard or whatever, I would say start with that investor profile, right? Get an idea of what does that investor profile tell me about myself and tell me about what is out there. I need to be exposed. Those are two things that are relatively inexpensive or free, but man, help you to get very, very clear, because without clarity, none of this is going to be possible anyway.
Yeah, I love it. Well, Joey, thanks for coming on the show. Thanks for sharing everything you did. I think a lot of really important just concepts and ways to get your mind headed in the right direction to being an investor. And so thank you so much for all that you shared today. I really appreciate it.
Oh man, it's such a privilege to be with you.
Folks listening, I know you're going to love this. Please connect with Joey. Make sure you check out the website, and please like, rate, and review the show so we can continue to get great guests. I appreciate you all for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?